Peter Rose, Longwood Currency Trading. Good morning. It's pushing toward the end of May in 2021, and I'm in a trade. It's a long-term trade, and I don't like it, and I'm not happy about it. And I'll chat with you about that. But I'd like to do it outside because, and here we go outside. Pardon me for moving the camera all around and everything. But geez, it's such a beautiful day. Yesterday we hit our first 80-degree day, and so it's been really nice. My son and his family are visiting from Chicago, and we've been all over the place. New Hampshire, where we live in the Lakes region, is so close to the seacoast area, which we were down visiting yesterday, all up the New Hampshire seacoast, which is only 18 miles, but it's really, really pretty, and just really appreciating the ability to get out. We were very fortunate that it's not raining or anything like that. So yesterday was a good day, and I was in a trade, and I don't like it, and so I didn't even turn the trading platform on to see how it was going, because I know how it's going. I'm losing money, a lot of money, and I've had this trade now for 2 months, and because I only trade one currency pair, I haven't been trading in and out at all. But I am trading, because when you have a position, that's the thing that you trade. Now, I did a video a while back on a rant concerning just trading one currency pair, and one of the primary considerations that I had in talking about just trading that one pair was that you can make all the money conceivable in your mind in one pair if you know how to trade. If you can lose all your money trading one pair, then you can certainly make all your money that you're looking for on one pair. So why bother with another one? But the main reason is that trading multiple pairs distracts from your attention. And because trading is such a dynamic thing, you have to be on top of stuff all the time, whether you're doing a long-term trade or whether you're doing a short-term. I mean, obviously, if you're doing a long-term trade and you get past the initial stage of 10 or 20 pips of profit, you can lock that 20 pips profit in and just let some bitch run and trail a stop and forget about it. I still wouldn't suggest at that point going off and trading another pair. Because currency trading is such a dynamic process and things are changing all the time, why are you trading? If you don't appreciate the trading process, if you don't love the trading process, you shouldn't be trading, because you're not going to be successful at it. You can't trade to make money. You trade because it's fun, because you enjoy doing it. If you're doing it for the money, you're screwed, because you're going to make the wrong decisions. You're going to make wrong decisions regardless of what you do, but even if you love doing it. But if you're just trading for the money and you make the wrong decisions, then you're going to beat yourself up about it. You're going to take it personally. And then you're just going to go on tilt and just chew the whole thing up. I'm thousands and thousands and thousands of dollars underwater on this trade, and I have been for a month. I think I picked picked the absolute swing point where it went against me to go into that final trade, and it was like my friend Langer's a scruffy trader over in the UK says, you know, it's score, and stop. It's the 3 S's. You know, you trade once, you make some money, you trade again, and you make some money, and then you're done. And generally that's what I do. I mean, on a daily basis, I like to trade for a couple hours, and then I'm done, whether I've won or lost or whatever. But the market, when I entered this particular trade, was going so well. I'd had about 4 or 5 trades during the day that were really successful. I was up 2% on my account just during the period of the day, and I went into this last trade, and phew, I mean, I just fell in love with it and stayed with it. Well, I stayed with it because I figured that last trade would be my last trade of the day, and I was going to go to a long-term basis, a long-term bias. I was going to follow the bias of the particular 4-hour period that I was in. I figured I'd probably be in there for 3 or 4 days or a week, because I was going to shoot for a couple of hundred pips of profit. And that is not something that I do. I haven't done that in a long time. I haven't done a long-term trade like that in a long time. But I just felt that the conditions were there for it, and if I could get through the day into a good enough profit position, that I could then lock the trade and let her go. I wasn't going to trail a stop. I was just going to lock a profit and then just see what happened from there. And it went against me after about 45 minutes or so. I was sitting there watching the thing, and I said, "Well, I'm good. I've got profit target that's sufficient, and that's out there far enough that there isn't even any point in putting a stop, because to go to even a 1-to-1 stop is, a couple of 300 pips. So why bother? I've got to let that thing breathe, as you do when you long-term trade. Well, the problem is that it's gone a couple of hundred pips against me, and more at times. And so for the theory that I had, or my plan for the trade, I'm not beating myself up. I'm just saying this thing is floating around in negative land for far longer than I thought that it would. And I went in a little heavier. I did stage into the thing because, again, it was moving in my favor. And so I staged in to about 3/4 of my full bank that I wanted to allocate to trade. And so at this point, as it turns around and comes back into positive land, which I'm hoping that it will do at some point here, I'm not going to go into my secondary bank to bring in more dry powder to add to that trade, so that I maximize it as a stage in from there. I'm just going to sit with this because I'm so pissed off that I got into it, and let myself think that a long-term trade was a viable thing to do in the currency markets. And I just got done with a video the other day talking about that I just don't see the practicality in the currency market of long-term trading. Those are perhaps the old days when you had these really, really long trends. But because of the increase, I'm talking 30 years ago, and strictly with bank traders and stuff, not even 30 years ago, 20 years. The increased communication in the world has led to more international commerce. And the political situations in the various countries has changed, that affects that commercial trade, international commercial trade. And so not only has the currency market in the last 10 years grown, or 8 years grown, from $5.5 trillion a day when I started looking at this stuff, and it was 3.5 when I started looking, I think, in 2007, and then by 2012 or 17 or something, it was up to $5 trillion a day, and now in 2021 it's $6.6 trillion a day. Now, a lot of that, most of it, 85% of it, because only about 15% of the dollar value is retail traders, but the tremendous increase in global commerce has created that extra dollar flow. You're not going to get more dollar flow out of the retail traders simply because we're not controlling any commercial plan. We're not trying to move anybody's money. We're simply trying to put value on one country's currency over another country's currency as to the viability of them transacting their business more efficiently than the other country, talking about balance of payments and supply demand and all the other macroeconomic shit that you can talk about. Regardless of all that, I hadn't been involved in long-term trading because I didn't believe in it in the currency markets. Look, I'm a real estate investor. I had a 40-year career as a real estate investor, and there were properties that I held for 20 years, 30 years. So I'm very well aware of the benefits of long-term trading. Real estate's just a really long trade. I mean, it could be a short-term trade. You could be a flipper and be out in and out in 90 days. But I held because I knew that's how you build wealth, is to capitalize on that compounding in the real estate market. But I saw that the currency market was different, and I didn't do long-term trading. I might hold a trade for a couple of weeks. That's not long-term. That's certainly not day trading, but it's not long-term investing. Where banks and institutional traders, they have a whole section of their traders. All the trader does is buy inventory, buy inventory. So when they get a customer that comes in and says, I got a $5 billion order here, you've already got the currency on hand in order to transact that. That's where you get these pin bars and all that other kind of stuff that sometimes occur when the trader maybe isn't doing his job quite as smoothly as he should, or he's in a hurry to do it, and he just needs to really pork the market. And so here I am in this long-term trade, and I think one of the reasons that I got involved in it was I was so successful at the start of the year with the trading that I was doing. I was running about 2% a week on my risk, and I just thought, well, this is great. If I go to this long-term time horizon, I could let that ride, and then the number of pips that would equate to your weekly trading, whatever number of pips it was that necessary in order to do that 2% a week or percent a week that I was doing at that particular time, would magnify itself from a dollar standpoint by simply holding the trade for 6 weeks or something like that, and instead of grabbing 10 pips, I'd be grabbing 400 or 500 or 600 pips in that one move. Now, as a short-term trader trying to grab 10 pips a day, you got 20 trading days a month. You're 200 pips a month. So to say that I'm going to hold the trade for 6 weeks and hope to get 300 or 400 pips is probably not out of the realm of expectation, as long as you've got that good trend. And unfortunately, there was a good trend, and now there isn't. I'm finding that the market is ranging within about a 400 pip range. It will go up 400 pips not from where I got in, because I got in kind of in the midpoint of that range, which wasn't a range at the time. It has become a range now over the last 6 or 7 or 8 weeks. So here I am bouncing around, waiting for the thing to come into a situation where the leg that the price is on extends beyond where I got in and takes me into the profit that I expected to have to complete the other side of where this range is. It just hasn't got there yet, and that's the problem that you're faced with in dealing with in a currency market in a long-term trade. Because of the leverage that we've got, it's really painful while this stuff meanders around, and you're waiting for it to hit. And so if your bank isn't big enough, I mean, I'm losing thousands and thousands and thousands of dollars, but I've got an immediate bank of, I'm trading 60,000, but I got plenty more behind that. So I'm not, from a dollar standpoint to account, it's well within reasonable bounds, but it's still thousands and thousands of dollars, and I'm just not willing to do that anymore. But I wanted to do that. The opportunity just looked so good that I thought that I would do the long-term trade, and I have stayed with that trade because I'm going to learn from that. I'll tell you what I'm going to learn. It's not to do a long-term trade ever again in my life. I had said that theoretically before, but now after losing somebody's yearly salary and sitting there with open losses of that magnitude and waiting for this thing to come back and hoping to have confidence that I can read the economics of the two pair countries and have the thing come back, maybe it won't come back and I'll just be a loser. I don't know. Or maybe it'll all work out and I'll make the reasonable gain that I expected to, or maybe I'll make $42.80. I mean, I don't know what I'm going to make because we can't control our wins. All I'm hoping for at this point is to get out without losing $10,000 or something, and that's not the proper trading thought to have. Thinking about getting out so that you don't lose as much as you were losing. That's not the attitude that you want to have. You want to have the attitude that you want to be in a profit situation. You want to be adding lots into that situation as it goes in your favor and trailing your stop behind. And if it takes you out, you average out and you have a big gain. That's the way you play the game. In order to do that, you're going to have some fairly significant losses along the way. But I'd rather do that on a day trading type of a basis, and I'll play the game today, then I'll close everything out and go flat, and then I'll continue my game the next day. And that's what I'm successful at. That's what I can do. When I do that, when I follow my rules, I make money. When I venture out into other things, what all these educators are telling you to do, oh, you have to study all this macroeconomics, and you have to know this, and you have to know that, and the other thing, and all this other crap. No, you don't. You have to understand yourself. You have to understand what price action is. You have to understand the basic reason for the Forex market and why price moves, what causes it to move. And because we do have pin bars and spikes and swing points where the leverage really kicks you in the ass, stuff like this doesn't bother you. For example, in the stock market, because the best leverage you're going to get in the stock market is 50 to 1. So not 50 to 1. It's 2 to 1. You're not even getting anywhere near that. You got to put up 50% margin in the stock market. So in the currency market, you put up 5%. You can't even. It's just. Well, you're trading, so you know that one pip move is $10 on a full lot. Take a one pip or one tick move on a stock market. It's minuscule. We have such an advantage that the currency market gives us to be able to trade during the day, make 10 pips, and go flat at the end of the day and watch a movie and not have to think about it. Why would you go long term? So even though I knew this theoretically before, I'm staying with this losing trade because either it's going to hurt me so bad that I'm just going to learn it that way, or I'm going to get out of it. But because I have stayed with it and suffered with it so long, even though it ended up being potentially being very profitable for me, I'm going to say, I don't ever want to do that again. It's just not worth the intermediate pain and frustration to deal with that shit regardless of the dollar amount that you win. Why put yourself through all that grief and aggravation and looking at the, why would you want to look at the charts every 4 hours or on a daily chart, to look at the chart and have to go through the agony of decision making every frickin' day that you're in that position? I'm not even going to pull I haven't even pulled my trading platform up today. I didn't pull it up yesterday, and I'm not going to pull it up today. I don't give a shit. I'm so pissed off at it. And, you know, that makes the trading not fun. If I was trading multiple currency pairs, what would I be doing? I'd be ignoring that and going off in my folly to play with another pair. Why? That's just stupid. I'm going to learn from this. And, you know, whoever it is that I come in contact with that wants to learn this currency trading stuff from me is going to have tremendous benefit from the insight that I can give them into why I talk about not going long term, but just to do a day trade. And day trading doesn't mean you have to scalp. I mean, I joke that I'm a scalper because I'm willing to trade 10 or 20 times a day if the market is hot and I'm in there. Why not? I feel that I'm protecting myself by doing that. And look, when I do it right, I can make 2-3% a week. So, you know, why not? I get in, it doesn't look like it's going to happen, and I'm out for a little teeny tiny loss, 2 or 3 pips. And I go back in, and I come back out, and I go back in, and I come back out. I go back in, and boom, it goes in my favor, and I make 4 times on my loss, 5 times on my loss. I feel that that's far safer than sitting there like I am right now for 8-9 weeks while this thing floats and farts around by giving the price room to breathe. Yeah, it's breathing. It's fucking choking me. Peter Rose, Longwood Currency Trading. Have a great day, a better day than me, and a great trading day, a better trading day than I'm having, a better trading week than I'm having, a better trading month, and I hope this thing shuts down pretty soon. And I'll let you know about it as we go through. Thanks.